Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1269A, and today's date is May 2nd, 2017, and the title of the episode is, Has the Date of the Economic Collapse Just Been Leaked? Let's get into the economic collapse financial news. Now, as we know, up in Toronto, Vancouver, there are huge real estate bubbles that are getting ready to pop, and we also understand that Home Capital Group, well, we know they are in big trouble. We know that there's a lot of money leaving this bank and people are taking their money out of the system. And what we're seeing right now is that this might spread to another Canadian mortgage lender. And again, these things are never isolated. Even though they continually tell us that these things are isolated, it never seems to be isolated in one area. It seems that something is always connected to someplace else, and so on and so on. And before you know it, there are many different mortgage lender banks that are affected by what is happening right now. And red flags were being waved, and they were very worried about the possible contagion hitting Canadians Equitable Group. This is another alternative mortgage lender. And it started to see an elevated but manageable decrease in deposit balances. Now, the company said that the customers have withdrawn an average of $75 million each day between Wednesday and Friday. And when we look at this situation, we need to understand that this is how it all begins. Now, they might be able to stop this. We know there's a bailout. We know that other things are happening right now, and they might contain this for a short period of time. But as we know, these things never stay contained. We also know there's a housing bubble in Toronto, Vancouver, throughout the United States, and in other areas around the world. And we know once one pops, well, it's going to spread rapidly throughout each country. And we've seen this before. This is nothing new. And we can see that we all need to understand and realize that this whole thing can go at any moment. Now, out in Greece, it looks like Greece made a deal with their lenders, and they promised even more austerity. Now, Athens promised to cut pensions in 2019, and we know that it always comes back to the people. And we know what the central banks want. They want the real assets of the country. So what did Greece promise? Well, they promised more austerity. They also promised to sell coal-fired plants and coal mines equal to about 40% of its dominant power utility public power corp capacity. So basically, the central bankers have come in and they're buying real assets from the country on pennies on the dollar. And we can see right now that the people might not just be sitting down for this. They might eventually, when you push them far enough against the wall and you keep pushing them and pushing them and pushing them and taking things away, eventually there is a revolt. And the Greek people, they've been hit hard over the many, many years. And with more austerity imposed on them, well, the current government, they should be worried because we don't know what's going to happen. Because as we can see, everything the central bankers have done for Greece has not helped at all. This has been going on for years and years and years, like 7 years now, actually longer, about 8 to 9 years. And every time they tell us it's better, they need more austerity, they need to sell more assets off from the country, and it just gets worse for the people, not better. Here in the United States, well, we see something happening in the subprime market of the auto industry. And we know that stocks have never been more overvalued than they are today. And we see that something is lurking in the subprime auto lending arena. Auto loan generation has gone absolutely vertical since 2009, rising an incredible 56% in 7 years. Even more incredibly, roughly 1/3 of those loans, they're subprime. They're garbage. So in the simplest terms, This is subprime 2.0. And the fuse, well, it has been lit. There is a 1.2 trillion debt bomb here. And we've been watching this for quite a while. And we can see that there's going to be major problems. Now, we just got a red flag to tell us that something has gone wrong, because auto sales, they have peaked and are now rolling over. So when we look at this, we can see that we're starting to see a repeat of what happened in late 2007, right before the economy fell off a cliff and the stock market crashed. So what it means is that they're not going to be able to lend much more out there. And this is the signal that we've been looking for. When auto sales roll over, it shows the consumer is tapped out. So the fact that this is happening at a time when auto lenders are making subprime loans and people aren't buying even when the offer is ridiculous and they're giving all these incentives means this industry has turned. It's now just a matter of months before the defaults start hitting, and we're already starting to see the delinquencies. And when we're looking at this, we see there's about 120 billion in garbage loans out there, and this could very well be the needle that bursts the Fed-fueled $60 trillion debt bubble. And we need to watch this very carefully, because this could all come down with a snap of a finger. Now, JP Morgan Chase, they are out there saying that they are seeing different red flags, and this is why they're starting to sell their stocks. And what we're seeing is that the retail investor is stepping in and they are buying stocks like crazy. The insiders, they are selling the stocks like crazy. This is a scenario that there is a huge bubble going on right now, and this is the top of the bubble, and this is how it all ends. Because once the insiders finish selling what they need to sell, that's when they crash the system. And JP Morgan is saying the risk reward is worsening. So they're looking at the Citigroup Economic Surprise Index, and they're saying that has rolled over sharply. Now, the Citigroup Economic Surprise Index rolled over sharply recently and is now in the negative territory. And the other times they've seen this, this is when we've gone into a recession. They see the impact of the Chinese stimulus. Well, that is fading. This is seen in the sharp decline in new project starts. Seasonals are now turning negative. April was typically the best month in Europe, but from May onwards, the returns tended to be poor. Summer seasonality was typically negative. Equities posted below average negative returns on most occasions during the May-September period. Commodity prices right now are weaker, which hurts the reflation trade. Inflation forwards have rolled over. Chinese PPI is likely peaking, and Italy could be the next curveball. So they're getting out of stocks because they're very, very worried with what is coming. And normally, these insiders, they know exactly what is happening. Now, Trump is preparing to replace the top banking regulator. And yesterday, you have to remember, he basically blurted out, maybe we should break up the big banks. And he was referring to Glass-Steagall. And we have to remember Glass-Steagall really kept the banks separated from risky investments, from the people's deposits. And we can see right now that he wants to go back to that type of model and actually break up the big banks that are manipulating, along with the central bank, everything that we see in the economy right now. And his first move is to get a new banking regulator. Now, who's he going to pick? We don't know as of yet, but he's looking at maybe Mr. Noreika, and he basically volunteered his time when he was on the Trump's transition team, and he worked as the treasurer at that point in time. So there are rumors about that, but we don't know where he's going with this as of yet. Now, Trump blurted out something else today, where he said we need a good shutdown in September to fix this mess. Now, what's very interesting about all of this and all these different things that he's saying right now, where he's saying that maybe we should break up the banking system. He has Andrew Jackson hanging on the wall inside the Oval Office, where he broke up the central banking system. We also understand that he is trying to bring down the economy, where he wants more spending. He wants to blow up more of these bubbles, so he's able to bring the system down to show everyone that under this system that we have right now, it cannot last. If you notice, when he first came into the White House, he started to cut things, and he started to work the budget a little bit, and then all of a sudden he just stopped, and he basically went in a completely different direction. And then he started out with all these different reviews. Review of the land, where Obama, Bush, Clinton put the land as collateral for the debt that we have right now. He started to review the federal overreach into education. And he started to sign different executive orders dismantling a lot of the things that Obama has done. And there's just so many things you can do with an executive order. And all of this, everything that he's been doing right now, all these reviews and all these different executive orders, this is in preparation for the collapse of the system. And the question is he trying to tell everyone that, listen, during this time frame, September, October, this is when most likely the system will come down? Do I know this for sure? No. We know that they approved a spending budgetary bill that will bring the entire government to October 1st and allow the government to stay open during this period of time, allow them to spend another $1 trillion, which most likely they're going to have to borrow from the Federal Reserve, which then they're going to have to raise the debt ceiling. So the whole thing ties into each other. And we can see that he is absolutely getting ready and preparing for this system to come down. Remember, when he was campaigning, he knew that this entire economy was in a bubble. He said it many times. Once he was inaugurated and he was in office, he came out and said the economy is a complete mess. In his mind, maybe he thought he could fix it. But with the corruption and everything that's going on in government, there's no way that you can fix something that has been built up since 1913. It's completely impossible. And with his companies, and we know that he's had many different defaults, he realizes how to create the default, how to push it to the next level. So you're forced to default. And he understands how to restructure. He understands how to put things right. Now, does that mean it's going to be easy? Does that mean we're going to wake up and the whole system's going to come down and everything's going to be back to normal? No. Basically what that means is that the crash of the system, the destruction of the dollar, the destruction of the world the way we know it, well, that's going to come to an end. The hard part is going to be rebuilding it. And to rebuild it, well, jobs have to come back. Manufacturing has to come back. The system has to be based on a sound money system. And everyone has to abide by it. You can't have the central bank just creating currency out of thin air. And this is why I really do believe when he starts talking about breaking up the banks, reinstating Glass-Steagall, having reviews of all the land where all the minerals, and also having the drilling of oil offshore and within the United States, he realizes that the United States, well, it's going to have to depend on itself. It will not be able to depend on the rest of the world to give products, to give oil, to give everything here to the United States. It's not going to work. This is how it worked in the past, where we moved dollars out to other countries and they returned products and services to the United States. Well, this can't be anymore. So the United States and the people here in the United States, well, we're going to have to be able to sustain ourselves by ourselves. And what are we going to need to do this? We're going to need our own oil. We're going to need gold, silver, other minerals in this land, because we're not going to have dollars to send overseas. We won't be the reserve currency anymore. This is going to end. And everyone's going to have to basically fend for themselves. There'll be no government handouts. I mean, this is how it was when the country first started. Actually, going through the 20s, the 30s, the 40s, many people had to do it on their own. There were no real government handouts. There were a few, but we all had to do things to get by. There was no one to depend on. There was no government. And when we go through this crash, you will not be able to depend on the government. The government will be struggling at this point. The government's going to shrink like you've never seen before. Most of the people that work for the government, they're not going to have jobs. And this is going to be a disaster. This is not going to be easy for everyone. And we rather have this type of collapse than a collapse with a war. Yes, most likely people will die during this period of time. During the Great Depression, people did die. But with a war that might go nuclear, you're talking about millions and millions more people dying. And I believe this is why he's trying to strategize to stop the war, just have the collapse, and we're all going to have to get through this together. So get prepared, get ready for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.